Back in December, the chartmaster Carter Worth said gold was about to break out.
Here's gold going back to the lows of the 1990s. Here's the well-defined tension. We are right into the apex of this standoff. I suppose you could bet that it's going to break to the downside. Not the bet that I would make. I would say gold likely resolves this standoff up and out.
Since that December call, gold is surging, and today the metal hit its highest level since April. But Carter says the golden rally is not over. It's about to shine on. Carter, what are you looking at?
Well, you know, commodities, as much as anything, have a way of getting much worse than imagination will allow, and of course can surge. And I think that's what's going on here. I think you've got plenty more to go. Let's draw some lines. So no drawings or annotations by me, but one thing you surely can kind of see is this formation and that sort of neckline. There's a lot of tension here to basically get resolved up. Let's just go to the next chart and see what you can see with just the downtrend line, same chart. And what's key is, and you can see this here, we've just started to move above the downtrend line from the all-time peak back in 2011. Let's draw it another way. It doesn't have to be a head and shoulders. You can call it a cup and handle, but it all points to a resolution higher, despite the little bit of strength we've seen already. And then the long-term chart. Cisco's worth more than any company in the world, and gold is, no one wants it, down in 1999. And what we have is, again, this well-defined setup, a lot of tension. And here, too, we're just starting to get above and break out from that level. And then also this. Gold, same chart, but its relative performance to all commodities. This is setting up for a pretty important breakout on a relative basis to all-time highs. I like it a lot. And then finally, if we were to have a vehicle, of course, the GLD is as good as any. It's all very symmetrical. You can see the head and shoulders. You can see the cup and handle. One way I would draw the lines is as follows. There's symmetry. The setup is right. In principle, this part here corresponds to this part here. Higher. Like it.
Does it matter what the dollar does, Carter? I mean, it does, but I mean, in terms of the charts and correlations and things like that.
Sure, it's important. The dollar's been a little slumpish, and one could say that's what's caused some of this. But there are great periods of time where the currency and the commodity are not inversely correlated. I think gold's got its own momentum now, and it's telling, of course, what's been released by the Fed, the way the Japanese yen is acting. This all is setting up for something that would suggest higher gold prices and trouble for equities, trouble for the economy.
All right, Carter, thank you. We'll see you on Options Action. He is not coming back to the desk.
What?
Just to be clear, so nobody walks over here by accident. Should we be worried that gold is seeing this rally?
Well, should you be worried in terms of what it means for the equity market?
Yes,
Probably yes. But if you're in the gold camp, I think I'm totally with Carter. And don't underestimate, by the way, the situation in Venezuela, who asked for their $1.2 billion worth of gold back from the Bank of England, and were basically told, thanks, but no thanks. I think that's playing into this as well. Central banks are buying gold. I think a weaker dollar clearly helps. I think gold goes higher.
Highest demand from central banks in 50 years. And GDX, the gold ETF, the gold miners ETF, usually outperforms 3-to-1 on GLD, and that's no exception to now. It's up 23%. Basically, while the market was collapsing, GDX is up 23%.
But how far is gold going to run? You know, 1350 to 1370, you have 5-year resistance. I get the fact that gold is all the things that it is, and I don't hate gold here. I just simply think gold has been unloved. It's under-owned. There's a dynamic here where you've actually traded and faded out of crypto. A lot of that's gone back into gold. That was one of the things that put pressure on gold. So gold miners actually look interesting, except for the fact that they're merging out of weakness, not out of strength right now. And they're running themselves better, so GDX is good because, yes, I think mining companies do run better.
Gold's a tough one for us because we think about from a long-term strategic asset allocation standpoint. We don't allocate to gold. We don't allocate to real assets. Most of the time people do because they're trying to hedge inflation. We think you can do that better in other asset classes. But really the bottom you saw in gold was in that first week of October. Recession fears perked up. People were really worried about a hard landing in the economy. I think you saw the employment report this morning. You saw ISM manufacturing back over 56. I think the case for a soft landing is becoming better and better. So potentially as that materializes, I think growth could lose some momentum.